Well, as you heard in the news, Harmony Gold has posted earnings a share of 49 cents for the 3 months to December as the gold price rose to an average $1,100 over the quarter. In the September quarter, Harmony reported a loss of 12 cents a share. Joining me to take us through the numbers and the prospects is CEO Graham Briggs. Graham, thanks for coming in today.
Good afternoon.
Rand on a bit of a weakening trend, which would be good news for you, wouldn't it?
It would be. Well, for all exporters, it would be a great trend, yes.
Because I think we've chatted about it before, so you didn't see the full benefits of that record dollar gold price that we saw in the December quarter, and mainly because the Rand was so strong during that quarter. So going forward, you're expecting that the Rand gold price to remain reasonably flat, you say in the commentary for these results. But if we have the Rand weakening above 8, a bit of relief at least.
Yeah, no, sure, Stephen. I think the one thing is that everyone's been calling the sort of Rand stronger for longer, and everyone's saying flat gold price. And we take our cue from that. You know, our crystal balls aren't any better than anybody else's. But, you know, if the Rand does weaken, then it'll be good news for any exporter.
Of course, we have, in the meantime, seen the gold price coming off quite significantly as well as we head into the new year.
Yeah. Ultimately, of course, we think that the gold is the ultimate sort of financial benchmark and not the dollar or the Rand. So, you know, that's just our opinion.
What factors do you see as supporting the gold price going forward? Of course, we have an increasing investment in gold ETFs, which is one of the factors that's been given for the rise that we saw towards the end of last year. What do you think is going to support gold?
I think there's 3 big players in the sort of gold industry as such: the ETF and the investment, not just ETF but investment, jewelry demand or the lack thereof, and then also coming onto the market, scrap gold. It affects the gold price quite a bit. There's a lot of scrap gold been coming onto the market. Ultimately, production hasn't changed dramatically. It has ups and downs and so on, hasn't changed dramatically.
Just looking at your production, slightly lower over the quarter, but that was deliberate, wasn't it? Because it's part of the restructuring and, as you call it, the fixing the mix of Harmony Gold.
Yeah. No, we will continue to have bumpy rides on some of our operations where we've taken our production, which has been non-profitable operations. So we've taken that out, and that creates a bit of pressure on the total volumes we produce, yes.
But of course, you do talk in the results about exciting exploration results out of Papua New Guinea. Of course, we know about the Pomodzi assets that you snapped up towards the end of last year. So that production is going to be coming on stream at some point and lifting those levels.
A very exciting quarter, Stephen. You know, we've done all the planning around the Pomodzi assets, and we'll be in production soon, probably in the next week there. We're already starting to employ people. We employed about 800 people. We plan to get up to about 2.5 in 2 years' time. In PNG, excellent exploration results in the copper gold prospect of Golpu. So yeah, we've had some great successes this last quarter. And
talk to us about Papua New Guinea. I mean, when would you expect to get commercial levels of gold out of some of those new finds you have there?
Well, Hidden Valley is producing. We've had a full quarter of production. It's been capitalized. During this next quarter, it'll come out of capital, be in commercial production. In Wafi Golpu, we'll be going through a lot of feasibility studies there. So it's a planning of a very big mine, you know, potentially something much larger than we've ever had before. And that'll take some doing. It'll take many years to go through that planning and obviously getting into production.
Well, you talk about 2.2 million profitable ounces by 2012. Yep. Are you on track for that? Are we going to get there?
We're on track, yes, we are, Stephen.
Just looking at costs, and obviously they were helped by the end of the electricity winter tariffs, which we discussed last time when you came in. That pushed up costs in the previous quarter. Picture going forward, though, is a little bit murkier, though. We're only going to know later this month what exactly Eskom is going to be raising tariffs by this year. Yeah. What's this going to do to your cost base if it does get that 35% for the 3 years that it has asked for?
Yeah, if it gets the 35%, it's going to be very expensive for all the gold miners, but especially us, because we're very dominant in South Africa. We use a lot of electricity. It makes it very difficult for planning purpose, not only this year, but next year and the year after. You know, how do you plan when you don't know what increase you're going to have? So it does become very difficult. At the moment, our electricity costs are probably annualized basis around 13% of our costs, potentially going up to sort of 16% of our costs. So it's a large number, and in 3 or 4 years' time, you know, our bill is sort of tripled.
Well, of course, you've already been taking some unprofitable shafts or mines out of operation at the moment. Would more shafts become unviable at that sort of tariff increase?
Stephen, it's always an issue about the ore body, the potential of the ore body, and of course the cost of extraction. So as the ore bodies go down, get depleted, grade drops off, and then obviously it's a big issue around costs. So it's a balancing act with that. Obviously if the costs go up dramatically on the operations, they may become unprofitable.
Retreatment of surface tailings becoming an attractive proposition. You speak about Phoenix and the Free State increasing volumes, St. Helena. Is this going to be a growing focus for you?
It is, certainly. We're certainly going to look at those two projects, and collectively they could produce, with the existing operations, up to 2 million. They could process 2 million tonnes per month through the operation, and they got good cash costs. They're obviously very safe because their operations on surface, and it's good money.
Graham, we spoke about 9 months ago, I think, at the end of your March quarter last time, just about the strengthening of your balance sheets. You do talk about in these results growth opportunities organically, acquisitions, also strategic partnerships. Anything you can divulge?
No, not really, Stephen. I mean, obviously we're looking around. We're looking at diversifying, not so much in out of South Africa, but into different geographies, into looking at more open pits. In other words, operations that will be more cost competitive to what we have. We're a very expensive operator, and we need to become more cost competitive.
Prospects for the current quarter, more of the same?
More of the same, probably a little bit more restructuring. Obviously a lot of the commissioning work still needs to be done, a lot of hard work for the management teams in commissioning.
And also the integration of the Pomodzi assets.
Absolutely, yeah. Getting those, the first blast should be, as I said, towards the end of this week or maybe next week. But a lot of work. Hidden Valley will see a good full months of production there, getting up to probably full production in the next quarter, the following quarter, not this one.